I want you to close your eyes for a second. Imagine it is a Tuesday afternoon. It's March 15th. You're standing in the checkout line at your local supermarket. Maybe it's Kroger, maybe it's Walmart, maybe it's the local shop down the street. You have your usual cart, the same stuff you buy every week. A carton of eggs, a bag of rice, a few pounds of chicken breast, some vegetables for salad, maybe a box of cereal for the kids. Back in December, this cart cost you about $85. You were already complaining about it then, right? You remember when it used to be $50. But today, on this Tuesday in March, the cashier scans the last item. You look at the screen. It doesn't say 147.50. You blink. You look again. You think the machine is broken. You look at the receipt. Chicken isn't up a few cents. It's up 40%. That bag of rice, it costs double what it did last month. Cooking oil, it's basically liquid gold. You feel that pit in your stomach? That cold feeling of how am I going to pay this? I want you to hold on to that feeling. Because what I just described isn't a nightmare. It isn't a movie script. It is a mathematical certainty that was locked into the system just 4 days ago, on January 12th. I'm a professor of finance. My job is to look at numbers, trade flows, and supply chains. And usually, my job is pretty boring. But right now, the data I'm looking at is screaming. It is flashing red. Most people think that what happens in Washington or Tehran or Beijing stays there. They think a tariff is just some boring tax that big companies pay. They are wrong. A tariff is just a fancy word for a price hike on you. On January 12th, the U.S. government put a 25% tariff on Iran. It sounds like a political move, right? Tough on Iran. But that single decision kicked over a domino. And that domino hit another one, and another one. And the last domino in that chain, it lands right on your kitchen table in about 60 days. In this video, I'm going to sit down with you and explain exactly how this works. No fancy words, no complex charts, just plain English. I'm going to tell you why a fight over petrochemicals in the Middle East is going to destroy the price of chicken in Ohio. I'm going to show you why China just canceled a massive check to American farmers and why that is catastrophic for us. And most importantly, I'm not just going to give you the bad news. I'm going to give you a plan, a real step-by-step plan on what to buy, what to store, and how to change your habits today so that when March 15 comes, you're the only person in that checkout line who isn't panicking. Grab a coffee. Pull up a chair. We need to talk. Okay, let's start at the beginning. You know the butterfly effect? A butterfly flaps its wings in Brazil and causes a tornado in Texas? Well, this is the fertilizer effect. On January 12th, just a few days ago, the U.S. announced a 25% tariff on Iranian petrochemicals. Now, if you're like 99% of people, you heard that news and thought, who cares? I don't buy Iranian petrochemicals. I don't even know what those are. Fair point. You don't buy them. But you know who does? China. Here is the secret connection that the news isn't explaining to you. China has 1.4 billion people to feed. That is a lot of mouths. To feed that many people, you need a massive amount of food. To grow that much food, you need a massive amount of fertilizer. And to make fertilizer, you need a specific ingredient called ammonia. Guess where China gets a huge chunk of its ammonia? Iran. Iran supplies about 23% of the stuff China needs to make its fertilizer. It's cheap, it's plentiful, and it keeps Chinese farms running. But then boom, January 12th, the U.S. tariff hits. Suddenly, that cheap Iranian ammonia is 25% more expensive. The math doesn't work anymore. So, almost immediately, on January 13th, China's big state-owned oil company, Sinopec, looked at the price tag and said, no thanks. They canceled contracts worth $1.8 billion. Now think about this like a car. Imagine Iran is the gas station. China is the car. The U.S. just raised the price of gas so high that China decided to stop driving. But if the car stops, the passengers, that's the food, don't get to where they need to go. This was the first domino, the severance, the cut. But physics tells us that for every action, there's a reaction. And China? They don't just take a punch. They punch back. So China is sitting there. They are angry. Their fertilizer costs just skyrocketed because of a U.S. policy. They're thinking, okay, you want to hurt our agriculture? We will hurt yours. Just yesterday, Beijing made a phone call. Well, it was a press release, but imagine it as a phone call to American farmers. They said, you know those soybeans and wheat we promised to buy? That $6.2 billion trade deal we signed? Forget it. We aren't buying it. This is huge. You have to understand, American farmers rely on China. China is the biggest customer for U.S. soybeans. Imagine you run a bakery, and your biggest customer, who buys 40% of your bread, walks in and says, "I'm never coming back." You're in big trouble, but it gets worse. China didn't just stop buying. They went shopping somewhere else. They turned to Brazil. Brazil grows a lot of soybeans too. China just signed a 10-year deal with Brazil. Read that again. 10 years. This isn't a temporary fight. This isn't "we are taking a break." This is a divorce. China just told a U.S. farmer, "We are married to Brazil now." Those trade routes are gone. They aren't coming back next year to SO now. We have a double Pincer situation. China has a fertilizer shortage. This means they will grow less food. U.S. farmers have lost their income. This means they will go bankrupt and plant less food. Do you see where this is going? Less food being grown in China. Less food being planted in America. Global food supply is shrinking. And when supply goes down, what happens to price? Exactly. It goes up. Now let's move to stage 3. This is where we are right now. As I speak to you, the supply shock. China knows they are in trouble. They know their fertilizer is expensive, so their harvest is going to be bad. So, what does a smart country do when they know a famine might be coming? They panic buy. China has stopped selling food to the rest of the world. Usually, they export some processed food. That stopped. Instead, they're going out into the global market, to Vietnam, to Thailand, to India, and they're buying everything that isn't bolted down. Rice, wheat, corn. They are vacuuming up the world's food supply to store in their own warehouses. Imagine you are at a buffet. Usually, everyone takes a plate and there is enough for everyone. But then, the biggest guy in the room, a guy the size of a giant, walks up and starts dumping entire trays of food in his bag. What does everyone else do? They panic. They run to the buffet to grab whatever is left. That is happening right now in the global grain market. Vietnam saw China buying everything. So Vietnam said, "Whoa, wait a minute. We need to feed our own people." So Vietnam capped their exports. They said, "We aren't selling rice anymore until we know we are safe." Then India gets nervous. Then Thailand gets nervous. It is a chain reaction of fear. And fear is expensive. In just the last few days since the January 12th announcement, the price of rice futures on the stock market has jumped significantly. Wheat is climbing too. This is not normal inflation. This is a vertical takeoff. This is the poker game where there are 10 players but only 5 chairs. Everyone is scrambling, and the price of a seat at the table is doubling every hour. Now, I can hear you asking, "Professor, if this is happening right now, why is my milk still the same price today? Why hasn't the price at Walmart changed yet?" This is the most important part of the lecture. You need to understand the lag effect. Grocery stores don't buy food every day. Kroger, Walmart, Costco, they are massive beasts. They sign contracts. They sign contracts with suppliers that last for a few months. I will buy 10 million eggs at $2 a dozen for the next 90 days. The contracts that are active right now were signed back in December. Back when the world was calm. Back before the January 12th tariff. So, the price you see on the shelf today, that is the December price. You are living in a time capsule. But here's the catch. Those quarterly contracts expire. And for most major retailers, the big renegotiation date is around March 15th. On March 15th, the Walmart buyer is going to sit down with the farmer and say, "Okay, let's sign a new contract for eggs and flour." And the farmer is going to say, "I can't give it to you for the old price. My fertilizer cost is up. China isn't buying my soy, so I have to charge more for wheat to make up the loss. The global price of wheat is up 30%. The new price is 50% higher." Walmart isn't a charity. Walmart is a business. If they pay 50% more, you pay 50% more. Actually, usually more than that, because they keep their profit margins. That is why I gave you that date. March 15th is when the dam breaks. March 15th is when the December time capsule runs out and the March reality hits the shelf. That is when the sticker shock happens. And it won't be a slow creep. It won't be, "Oh, inflation is up 2% this month." It will be a step change. Overnight. One day eggs are $4. The next week, they are $7. One day bread is $3. The next week, it is $5.50. Now, I know some of you are thinking, "You're exaggerating. The government will fix it. It can't be that bad." Look, I wish I was exaggerating. But I study history. And history tells us that this exact pattern has happened 3 times before. And every time, The government didn't fix it and people got crushed. Let's look at 1973. Some of you might remember this. President Nixon wanted to look tough. He wanted to lower prices at home. So, he banned the export of American soybeans. He said, "America first, we keep our beans." He thought it would help. Instead, it caused global chaos. Japan, which relied on our soybeans for tofu and soy sauce, panicked. In 30 days, food prices in Tokyo went up 63%. Imagine that. Your food bill going up 60% in a month. People lost their savings just trying to eat. And that was when Brazil decided to start growing soybeans, and the U.S. lost its monopoly forever. Let's look at 2008. Remember the financial crash? While everyone was looking at Wall Street, there was a food crisis happening. India and Vietnam got scared and banned rice exports. It wasn't that there wasn't enough rice. It was just fear. But fear was enough. Rice prices in the Philippines tripled. In Haiti, people couldn't afford to eat. There were riots. The government was overthrown. 100 million people around the world fell back into poverty in 90 days. Why? Because two countries stopped trading. Let's look at 2011. The Arab Spring. The news told you it was about democracy, about Facebook, about freedom. That's a nice story, but it's not the whole truth. The truth is, it was about wheat. Russia had a drought and banned wheat exports. Egypt buys its wheat from Russia. Suddenly, the price of bread in Cairo doubled. When you live on $2 a day and the price of bread doubles, you don't protest. You riot. You burn down the government buildings because your children are starving. The Middle East burned because of the price of flour. We are seeing the exact same indicators today. The shipping data shows Iranian exports are down 89% since January 12th. The futures markets show wheat is up. The fuse is lit. The explosion is coming. We're just waiting for the sound to reach us. This crisis is actually worse than 1973 or 2008. Why? Because the U.S. economy is getting squeezed from two sides at once. I call it the double Pincer. Pincer 1, the farm crisis. I mentioned earlier that farmers lost their Chinese contracts yesterday, but there is a detail I left out. China didn't just stop buying food. They also restricted the export of rare earth processing technology. Professor, what does rare earth have to do with farming? Everything. Modern farming isn't a guy with a hoe. Modern farming is a guy in $1 million tractor that drives itself using GPS, sensors, and advanced computer chips. Those machines need rare earth magnets and chips. China controls 87% of that supply chain. So, the American farmer is getting hit twice. His income is gone. China won't buy his crops. His costs are exploding. His equipment is getting more expensive and hard to repair. We're looking at a wave of farm bankruptcies in the Midwest that will make the 1980s look like a picnic. And when farmers go bankrupt, do you know what they don't do? They don't plant crops for next year. So this isn't just a March 2026 problem. This is a 2027 and 2028 problem. We're destroying our own ability to grow food. That I get this question a lot. Won't the government step in? Don't we have strategic reserves? I have to be honest with you. The cavalry isn't coming. Strategic reserves? We used to have massive stockpiles of grain, just in case. But in 2008, and again recently, the government sold them off to cover budget deficits. We have the lowest grain stockpile since 1948. We literally don't have the food to release to lower prices. The cupboard is bare. Price controls? People ask, why doesn't the government just set the price of eggs at $3? Nixon tried that. Do you know what happened? Shortages. If it costs Kroger $4 to buy eggs, and the government forces them to sell for $3, Kroger just stops selling eggs. Then you don't have expensive eggs. You have zero eggs. The shelves go empty. Black markets start. It gets ugly. The scary truth. From a cold, geopolitical perspective, the pain is the point. The government is using tariffs to hurt Iran. The cost of hurting Iran is your grocery bill. China is using food bans to hurt the U.S. The weapon they're using is your hunger. You're not the customer here. You are the ammunition. Governments are willing to let you pay more for milk if it means they win a chess move against their enemy. Okay, deep breath. I know this is heavy. I know you might be feeling anxious or angry. That is a normal reaction. But anxiety without action is just suffering. Anxiety with action is a plan. I'm not here to scare you. I am here to empower you. You cannot stop the trade war. You cannot control what Xi Jinping or the president does. But you control your own kitchen. You control your own bank account. Here is the March protocol. This is exactly what I'm doing for my family and what I tell my students to do. You have about 60 days. Step 1. The front-run strategy by now. Think like a hedge fund manager. You know prices are going up in March. So, by now at January prices. Between now and February 1st, take $200 or $500, whatever you can afford, and build a deep pantry. I'm talking about stuff that lasts. Rice, beans, pasta, canned tuna, cooking oil, flour. This isn't hoarding. Hoarding is panic buying when the shelves are empty. This is arbitrage. If you buy a bag of rice today for $10, and in March it costs $15, you just made a 50% tax-free return on your money. Show me a stock that gives you a guaranteed 50% return in 2 months. It doesn't exist. Your pantry is your best investment account right now. Step 2, diversify your protein. Meat is going to get hit the hardest. Why? Because cows and chickens eat corn and soy. When corn and soy prices double, meat prices double. Start shifting your diet now. You don't have to go vegan, but be smart. Fish, eggs, if you can find a local source. Lentils, beans. These things are less connected to the corn/soy market. If you rely 100% on beef, your budget is going to get slaughtered. Diversify. Step 3. Go local, short the supply chain. This inflation is happening in the global supply chain, ships, tariffs, international trade. But the local supply chain, the farmer 10 miles down the road, is insulated from a lot of that. He doesn't have to ship his cows across the ocean. Find a local CSA, community-supported agriculture. Find a local rancher. Buy half a cow. Buy a subscription for vegetables. Lock in your price now. Tell the farmer, I will pay you up front for the next 6 months. You're locking in today's price. When the grocery store spikes in March, you won't care because you already bought your food from Dave down the road. Step 4. Watch the canary. Don't watch the evening news. They will tell you about the crisis after it happens. Watch the markets. Go to Google Finance or the CME Group website. Watch the futures price of rough rice and wheat. If you see those numbers go up 5% in a week, that is your alarm bell. That means the shock is getting worse. That is your signal to go buy more non-perishables immediately. The market is a time machine. It tells you what happens next. Step 5. Protect your cash flow. The Federal Reserve says most Americans have very little savings right now. If your grocery bill goes up $200 a month, can you handle it? If not, you need to cut spending today. Cancel the streaming services you don't use. Stop eating out for a month. Build a cash buffer. In a resource crisis, cash is king, but calories are emperor. You need liquidity to handle the shock. Listen, we are entering a new era. The world we grew up in. The world of cheap goods from China, where you could buy anything you wanted anytime. That world ended on January 12th. We are entering the era of resource nationalism. An era where food, energy, and raw materials are weapons. It's going to be volatile. It's going to be painful for people who are asleep at the wheel. But for you, you are awake now. You understand the mechanism. You see the dominoes falling. You have a 60-day head start on the rest of the country. The clock started ticking on January 12th. The window closes on March 15th. Don't panic. Prepare. Go look at your pantry. Look at your budget. Make the moves. History teaches us that in every crisis, wealth is transferred. It transfers from the reactive to the proactive, from the blind to the visionary. Be the visionary. And listen, if you found this helpful, if you want to know the investment side of this, like how to actually make money from rising agricultural stocks or ETFs, I'm going to cover that in my next class on Wednesday. So make sure you subscribe so you don't miss it. Take care of yourselves. Take care of your families. I'll see you in the next one.